Welcome back to the What's More podcast. I'm your host, Quinton Harris. You're dialed in for episode 201. Hey, we're coming fresh off that episode with Phil Jones where he absolutely crushed it. And he talked about the perfect thing to say. I thought that was really cool. I hope you guys enjoyed that episode. And right before that episode, we had the one on the Federal Reserve on the 50 basis point cut. We kind of talked a little bit about why that happened, what it meant. And in this episode, I kind of want to piggyback on both those episodes, right? What's the perfect thing to say to all the naysayers out there who essentially said, hey, listen, the housing market's inflated, the bubble's going to happen, the Federal Reserve is not going to cut rates. I had a lot of social media basically comments over the last 90 days where people are going, this is not going to happen, the Fed's not going to cut, this is why. I mean, and a lot of it stemmed from, really, I don't like the word nonsense, but there wasn't a lot of factual data to back that up. It was a lot of opinions, right? And I respect people's opinions and why they had it, and I was absolutely encouraging, share with me what's going on. So in this episode, I kind of want to talk to those people, right? And to our audience, because this is one that I think speaks to everyone that's either looking for a home or owns a home. So let's jump right into it. So what I want to talk about is some of the U.S. home equity data that has recently been released. And, we've been talking about this pent-up demand. I'm going to show you pent-up demand that's been happening over the last really, decade plus. I'm also going to show you some demographic studies. And, I think it's pretty cool if you've ever seen the studies on Lee Iacocca, and if you watch the Ford versus Mustang movie, there was a scene in there where he's actually presenting to, Henry Ford II, and he's talking about generational studies, right? And the whole concept behind it was that he was describing why the cars they had weren't appealing to a younger generation. And this was the beginning of demographic marketing at its finest, really. Lee Iacocca kind of owned this concept, but the short point is that's how the Mustang was developed, because a younger generation, the boomers, during that time did not want the cars that were out there, so they made something that they wanted, which was the vast majority of the population coming up at that time, and they sold the hell out of that car, right? It still became one of the number one selling vehicles, cars in America. And so Iacocca, when he left, long story, ended up going over to Chrysler, did it again with Dodge when he continued to follow that generation. And then what do you make years later? That was number one selling vehicle was the Dodge minivan, right? He did generational studies because he followed that generation, and he knew patterns would show what they wanted, what they needed in their life based on age demographics with the vast majority of the population. It was a very smart move, and we learned a lot of things from that. And we can take those concepts today and we can actually use them in real estate. We can actually use them in a lot of different things. But for this purpose of this podcast, I'm going to use it in real estate. So we'll talk a little bit about that. So let's jump into some of the data that came out on the U.S. home equity. Now, if you're listening to this on Spotify, if you're listening to this on Apple Podcasts, we'd love the 5-star bump. Maybe leave us a review saying, hey, I'm digging it, or hey, this is not for me. Either way, we're fine. A 5-star review and a bump would be great. But more importantly, if you want to see some of these graphs, we got some really cool charts we're going to put in our YouTube channel at What's Your One More with the number one. I'm going to start with this one, the home equity data that came out. So on U.S. home equity, and this is for all my foreclosure bros out there that thinks things are going to happen here. The year-over-year change is up almost a full percent to $1.3 trillion in U.S. equity. So it's up. It's up this quarter here on that, in the year-over-year change. But the total equity that's out there, and I love this stat, the total equity that's out there in homeowners is $17.6 trillion with a T, $17.6 trillion in U.S. home equity. And the average homeowner has about $315,000 in U.S. equity in their homes. But of that, how much could be used to, we call this tappable equity, how much of this could be pulled out, used to pay off debt, used to put on the sidelines, used to invest, used to buy another home? That's about $200,000 in average tappable equity. Now, I love the people online that keep going, hey, listen, it's a bubble. It's going to burst. This is not real. And you've got people with their own YouTube channels that are very successful that preach a lot of negativity on this. But here's some of the facts. The negative equity in America right now is about 960,000 homes, right? So 1.7 of all homes with mortgages in the United States. So 1.7 of all homes in America have negative equity. That comes down to 1%. 1% of all owned homes have that. One. So you got 99% that are in pretty good shape here, right? And I would envision that of that negative equity situation, most of those were bought in areas of the country that have maybe regressed and were bought in the last really 12 to 18 months. And so there are some pockets. I mean, we've heard from you guys. We've done the research. There's areas of the country that have gone backwards because they received such a significant run up from 19, 20, 21, and parts of 22 that in 23, those prices have regressed, and that might be what that is. But what's interesting is that if you take a look at a couple of things here, if you look at all homes in America, right, equity on all the homes is $40 trillion in all homes. Like the total equity at 17.6 are people that have mortgages on it, but the total equity on all homes, these includes people that have paid their home off that are free and clear, is $40 trillion. Pretty impressive. If you look at the total population there, 340 million, 136 million are household homeowners, right? And of that, 91 million own a home, 45 million rent. So you've got 45 million opportunities of potential homeowners out there that are looking to buy. It's about 33% of the household population. 91 million own their homes. Here's something that I didn't know. Of those, 34.5 million own those homes free and clear. So 38% of homeowners own their homes free and clear. You know, we talk about that lock-in effect. The one thing that we leave off the lock-in effect, and this kind of like opened my mind to it, is that 38% of homeowners in America own their home free and clear. That's pretty impressive when you take a look at it. And that 56.5 million have a mortgage. So 62% of all homeowners in America have a mortgage. And we've talked about, of that 62%, how much are locked in. So then the next thing I want to take a look at is this demographics, right? I want to take a look at the demographics that break down potential homeowners and current homeowners on this. And I thought this was interesting. Let's look at homeowners by age, because if you think about some things that have changed over the time, the average homeowner age from when they buy their first home has moved up pretty dramatically from what it was a decade ago, right? So right now it's about 33 years. You could argue somewhere between 32 and 34, but 33 years is kind of what a lot of the studies are saying right now, meaning that people are buying a home later on in life than when they used to buy their first home. And there's a lot of reasons for that. You could immediately jump to affordability. You could immediately jump to interest rates. There's a lot of things you could jump to, price of home, et cetera. But that trend has been going that way for some time. And so what we're finding is that homeowners are deferring later in life to buy a home, taking on that debt, taking on that risk than what they were a decade ago. But anyways, the thing that happens with that is this, is that when you evaluate the generations, you look at, okay, let's put them all on that homeowner by age of 30, and let's see what it looks like during that time. So if you look at the first one for baby boomers, the current age of baby boomers fly between 60 and 78 years old right now, and that's about 71 million of the population in America. There's about a 74% home ownership rate of that generation. At the age of 30, 48% of that population had a home. And by the age of 40, 65% were homeowners. If you take a look at Gen X, that's going to be people that are somewhere between the age of 44 and 59. That accounts for about 65 million of the population and has about a 65% homeowner rate of that 65 million. 42% of that generation by the age of 30 was a homeowner, and 59% of that generation owned a home by the age of 40. Take a look at the millennial generation. That's somewhere between the age of 28 and 43. That counts for the largest bulk of the population, edging out the boomers by 2 million. The home ownership rate of millennials, 45%. By the age of 30, 33%. And by the age of 40, 55%. Now, interesting on this is that what you're finding is as that generation, obviously that's a big jump from 33 to 55, but somewhere between that age of 30 and 40 in that range is where that comfortability of home ownership is really starting to be established. And that didn't happen just because rates went up over the last 2 years. This has been a trend that's been happening for some time here. And if we even go as far as Gen Z, which is half that generation wouldn't even be able to buy a home because of age, but that's somewhere between the age of 12 and 27. That accounts for about 69 million of the population. 8% of that has a home ownership rate, and obviously because it's 12 and 27 years old. It'll be interesting to see what that trend is when that group turns 30 and what that looks like. Now, what I got from this is that over the next 10 years, Gen Z is going to have an 8% to probably 33% home ownership rate. So you're going to have that many more prospective homeowners coming to the market, which is about 17 million people, right? So if we're looking at generational marketing, we already know that the millennials, they're already coming online to buy homes, and there's a significant amount of them, meaning that there's 45 million millennials in total that are between the age of 25 and 35 years old. 17% currently are living with their parents. So that's another 8 million people that may jump into home ownership. And if you take that 8 million plus that 17 million from Gen Z, you've got 25 million people that are actively looking, just based on generational studies alone, to buy a home. We don't have 25 million homes available. So when you're talking about home equity, and for all the people that are negative about real estate, and it's gotten too high and that it's going to collapse, it's going to bust, it couldn't be more simple than supply and demand. There's not enough supply to appetite, or excuse me, to suffice the appetite of the demand. It's just not, there's not enough supply to offset the demand. The demand is far greater. And I've continued to talk about this for almost 2 years on this show. And here's some studies and some demographics that we're actually showing us. This demographic chart will also be in our YouTube channel at What's Your One More with the number one. And you'll see some of this data and sets that we're sharing on here. And I did want to say a big thank you to our friends Dan Habib and Barry Habib over at MBS Highway for providing these graphs. They do a great job with that. And think the world of those guys because they're always cutting edge and out in front of everything that they do, and appreciate them sharing this stuff with us here. And the final graph I want to show that kind of correlates with what I'm talking about is this pent-up demand. I mean, if in this particular screen, you're going to see that this is the share of 25 to 35-year-old people living with their parents, right? And the reason I share that is because you'll see a big change and shift from 1940 to 2024. Yeah, we go all the way back on this graph here. But this is from the U.S. Census and then the apartment list that sends out this data on here. But what's interesting is this. You see almost like a V curve, right? And this curve is at the peak in 2024, meaning that there's 17% of the population between the ages of 25 and 35 are living with their parents right now. And again, you could say it's affordability. We did a whole show on this, right? We did a whole thing on parents helping their kids and putting their own retirement on hold to help their kids, right? We've seen other studies on this, but this one kind of paints a picture that I thought was real interesting because you're actually seeing it dating back to 1940, how this has gotten worse from 1960 moving forward here. And again, you can blame it on cost of living. I mean, obviously, we just did an entire podcast on what's going on with the economy as far as inflation and cost, and we understand that. And that makes sense why 17% is there. But at the end of the day, this 17%, this pent-up demand, that equates to quite a bit of people. And I mean, if you take a look at it, that's almost 20 million people that are going to be looking to buy a home during that time frame. And where are the homes for those people? Where is the opportunities for those individuals to become homeowners somewhere between that 30 and 40 years of age? Well, it's not there. And you're not going to get that backfilled by builders in the next 5-10 years. What you are going to have is you're going to have people that are going to buy and sell their homes during these times. And those prices are going to continue to go up. And we just saw where the Federal Reserve did reduce the Fed funds rate. Now, that doesn't have a direct impact on mortgage interest rates, but we have seen the mortgage interest rates come down. Like almost like taking stairs down the stairwell. They've come down. It hasn't been a cliff drop off. But as those continue to come down, that appetite for buying psychologically starts to increase. The affordability starts to increase. And we've talked about that affordability window is only there for a short period of time before the seller absorbs it, right? And maybe raises their prices. But the reality is that I don't see how real estate is going to be any sort of a bubble or a crash when the demand is so high. Because during that bubble, that demand, that crash that happened in 08 and 9, which was caused by 3, 4, 5, and 6, and 7, what happened was that the demand deteriorated significantly, not just a little, but significantly. And we were still building at a rapid rate, and we were outpacing the market with supply. And we had toxic loans that don't exist in this market right now, and they haven't existed for some time due to QM and the ability to repay. Those things don't have the same impact as they did in 2008. And so when you have the reversal of 2008 right in front of us right now, you have millions, and I mean millions of prospective buyers that want to buy, and you have rates that are coming down. That is a recipe for the product, in this case, real estate, to go up. And I think that's what you're going to continue to see happen. Now, granted, there will be some portions of the United States, some pockets where that doesn't happen. We've already seen that. But maybe you're in a market right now where there's been a reversal, and maybe you're part of that negative equity, that 1% of America we talked about. Well, maybe that goes from negative to just flat, and maybe you get rid of the negative equity and it goes back to baseline. There are things where that will improve as these rates continue to come down, the demand continues to keep going and be pent up, and you're going to see significant windfalls in the real estate market. So if you're on the sidelines and you've been waiting, I had someone tell me, what a terrible idea to encourage people to buy a home in this market. Well, okay, that's a difference of opinion. I respect yours, but I don't think it's a terrible piece of advice because data shows me these homes have continued to go up. Again, if you're in that 1%, if you're in that small pocket of America, I agree with you. Maybe that's not it. But for the bulk, the 99% that I'm referring to, that data shows us that that's not a bad piece of advice or suggestion. Is take advantage of real estate, take advantage of really the 76 years of wind that industry has had versus that very, very few select years where it was not winning. And again, we talked about why the recipes don't even make the same. They don't even add up right now, because supply demand curve, the most basic of economic formulas right now, are completely opposite of what they were during that time. So guys, tune into our YouTube channel. Take a look at some of these graphs, share them. This is a great conversation just to have around the table with people, because it definitely changes the perspective of individuals when you sit down and talk with them and ask them, hey, do you think the real estate market's going to go up or down? And most of them that don't own a home are going to tell you it's going to go down because it has to. I talked about that interview that I had with someone when we were having lunch and what the waitress told us. And then people that own a home are going to tell you, well, I wouldn't think it's going to go down because there's so much demand out there. People are looking to buy my home all the time, and I wouldn't sell it for less than this. So you have two different theologies based on two different haves and have-nots. So this is a good conversation piece. It's good data to share, and I think it opens everyone's eyes. I know it did mine when I saw some of this data from the demographic sets that were put out there. So if you like what you're hearing, 5-star review this podcast. Please give us a bump there on Apple or Spotify. More importantly, check out our YouTube channel at What's Your One More. Go on there, leave some comments, and subscribe. We'd love to hear from you guys. Till the next time, we'll see you at What's Your One More.
Got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I